Hey guys, thanks for tuning in. This is Dan Frio, the Mortgage Update, and today we're going to talk about home loan basics. Too often I just assume people know, what they're doing when they call me. It's like, I'm looking to buy a house. Where do I start? Let's start from the basics. What really is a home loan? How do you get it? What do you do? What's it all about? So kind of let's dig into this just to help you out a little bit. Here's me. This is me. My name is, again, Dan Frio. I'm a mortgage broker in the Chicagoland area. Have been for 30 years now. If you like this video, please don't forget to give me a thumbs up down below. And subscribe to my channel. And then hit that little bell there so every time I do post a video, you get an alert so you can check in on this. This is very informative for realtors, or if you're in the market for a loan, a mortgage, a home. I have probably close to 200 YouTube videos, basically like this, from basics to all the way up to specifics. So today we're just going to talk about, what exactly is a home loan. And here's ways you can get a hold of me. Again, I hope you like the video. Please leave some comments down below. If you'd like to reach me, you can reach me at the 630-338-1160 or dan.frio@gmail.com. So let's get to it. Probably the first step to getting a mortgage. So let's assume you want to purchase a home. What do you do? It could be overwhelming. You can go online to the online systems and plug in your data and things like that. I do have an online system where you can click it and you can apply online. The first thing that's going to happen, I'm going to call you because probably there's sections of that application that you did inaccurate. So, it's that old saying, junk in, junk out. If your information that you plug in is not correct, and let's say you just go through that process, click, 2 minutes goes by, you do this, you get your pre-approval, you go out and you see your realtor, and that information is wrong, you're going to go down this street and hit a brick wall in about a month, and everybody's going to be upset. You're going to be upset. Your realtor's going to be upset. The seller of the house is going to be upset. Let's get you started out on the right foot. So I'm a mortgage broker. The reason why I do it is I want all of this stuff. I want to be your advocate. I have access to wholesale rates. A lot of the companies that I deal with, you can't even access their rates or their programs without going through a person like myself. Turn times. I'm getting most of the closings within probably 10 days. I can get you a clear to close. I try to make the process as easy as I can. I walk you through it. I tell you what to expect out of the gate, what paperwork we're going to need, basically the whole how we crawl, walk, and run. Access to options. This is a huge piece of why I am a broker. If you call a bank, they have their guidelines, their rate sheet. That's it. If you deal with a mortgage broker, you're going to get wholesale rates from, I work with over 20 different wholesale lenders. So not only am I your advocate, I have over 20 rate sheets to go through to pick the best rate for your particular best option. So for example, you might call the bank, they might not do an FHA loan with a 580 credit score. Not a lot do. I do. I have a couple lenders that'll do that. Your debt ratio, and these are a little bit in-depth terms. Your debt ratio, you might have been declined because you have over a 50% debt ratio. And again, I have other videos to kind of explain this, but I have lenders that'll do that. So the biggest thing here is you need help. You want to find the best rate in town. You want to close your loan usually within 30 days. And you want as many options as you can. So that's why I'm a huge proponent and why I elect to be a mortgage broker. Your down payments. Now, these consist of a whole slew of varieties. Again, going back to that options sections. But conventional financing right now, other than if you go with a USDA or a VA loan, you can get programs right now with as little as 3% down. So we're going to go over some of your down payment options right here. If you don't put down 20% when you're getting a loan, you're going to need what's called mortgage insurance. And there's a whole variety of mortgage insurance options. There's lender paid, borrower paid, things like that. Then there's the down payment that you have to put down Again, you're going to need some down payment unless you go with a USDA loan or a VA loan. In many cases, the money can be gifted to you from a parent, relative, brother, sister, something like that. So again, what we're trying to do right now is we're trying to, go over all the mortgage process or terminology and things like that, basically with a wide angle right now. And other videos I have that'll dig down into more specifics for you. But I want to explain some of the terminology, programs, who to use, why to use them, and so forth. So that's the down payment section. And again, it could be down payment and gift. You can get gift of funds for your down payment. Credit scores. This is a huge piece of the puzzle. There's going to be three main pieces of a puzzle when it comes to mortgages. Your credit score, or your FICO, is what we call it in the business. Your down payment, and what kind of property are you looking to get? So your credit scores, your down payment, what kind of property you're looking to get. Those are big factors, in this process. So your FICO scores, they range dramatically. I actually created a website just recently. It's called creditscoresandmore.com. Please check it out. This can help you pull a free credit scoring system. You can actually get your actual credit report that all the lenders or almost all lenders use. So you're getting actual fact-based credit scores and credit data. And then also there'll be there's credit repair systems in there and actually attorneys there to help you get your credit kind of reestablished or helped if you need that. Again, that is www.creditscoresandmore.com. But your FICO score, it ranges, and it ranges from about 300 to 800, and it can go over 800, but that's basically where everybody falls into. It's determinant on the number of accounts that you have in the past and in the present. Lates and delinquencies, that plays a huge role in if your score is high or low. How late they've been, how long ago they've been, delinquencies, how many you have, collections, charge-offs, things like that. And again, these are areas where I can help be your advocate, like it showed back in a few slides back, and to kind of help explain to you, we can pull your credit, we can work on that, we can help you. I can send you over to the website to get some credit repair advice and things like that. Taking on new credit, inquiries, a lot of misinformation about inquiries is, you called one place, and that mortgage company or bank said, don't call anybody else because it's really going to affect your credit score. Believe it or not, it's not. And you could probably have 4 or 5 pools within a couple of days, and all those creditors are going to get the same credit score unless a creditor kind of pushed in your data to change that credit score number. So don't be locked in with the first place you call because they scared you, because if you call somebody else, that your credit score is going to go down. That is not the actual facts behind that. So let's go on. Employment and history. Your employment, in most cases, you need a 2 years in the same line of work. If you recently were out of college, and you get a full-time job, you can use that. So let's dig into this, because this seems to be a huge issue that I'm facing right now with a lot of clients. Okay, it says 2 years in the same line of work. However, let's say you were a sales guy at a car dealership, and now you went to a company, and you've been there for a year, and you're salaried. You work 40 hours a week, and it's documented. Your pay stubs reflect that and everything. You shouldn't have a problem getting that done. And even though you have 1 year on the job. Where this comes into play a lot of times, if you have a part-time job, you need to be on that job for 2 years to use for part-time jobs. Okay? College. I've recently done young lady who's gotten out of college, and she has her nursing degree, and she was blessed with a job. And she just started. 6 months later, we're able to get her a loan because she has a full-time job. We can document that in the past she went to college to be a nurse, and it all pieces together. It makes sense. Self-employed, that's if you own your own business, or you could be a salesperson on commissions, and you're getting paid a 1099. In those situations, you have to have a 2-year history on that same job, basically. It can be possibly a different job. It basically has to be the exact same thing, though. Like, again, you're selling cars at Cadillac, now you're at Ford. The reason for that is they want to get a trend. In that business, your income is going to fluctuate up and down and up and down. It could be dramatic. So they want to take a 2-year average to kind of blend it out, see what you have. W-2s, that's if you have a job, you're salaried. You go to work every day. You work 30, 40 hours a week and so forth. So that's the W-2 portion of that. So let's go on. Income and debt to income. We call this your debt ratio. Basically, in the easiest terminology, we take all of your debts that show up on your credit report and we divide that by your income. You could have salary or commissions, full-time or part-time. We need your tax returns. There are dockless options that we have to kind of make things a lot simpler. And these are the things we're going to discuss if you call me and we want to go over and figure out if I say, we need to make sure, I got to make sure you debt ratio. And this is what I'm talking. I need to go over your income and what kind of income that is. How do you work full-time, part-time, things like that, and the documentation that I would need. The next thing is debts and deductions from your pay. These are things that when I get on your tax or get your tax returns, it'll show on there that you have deductions. So it could even show on your pay stubs. You're getting a child or alimony that you have to pay. That's probably one of the biggest things that we see in this section of it. Again, these are the debts. The debts that we see are the debts that show up on your credit report, or possibly in this case, it's not your child support or alimony wouldn't show up on your credit report, but it would show up on your tax return. So we'd see that. So again, I'm brushing this with a broad stroke of just kind of going over some terminology with you and some of the supporting documents that we would need. But what debts are considered. Again, that's what's on your credit report. I'm going to go over, it's kind of redundant from the last page, but are you salaried or commissioned? Student loans, a whole bunch of things. So these are, we're going to discuss on your debts. Assets, things that can be considered your assets. I'm going to ask you for bank statements, a 401k statement. Cash cannot be used. So if you have cash in the mattress, under the bed, you can't use it. I would strongly suggest put that in the bank now. So if you need that, if you're looking for a home in the next couple months, we can use that. It has to be in your account for 60 days. So that's assets. Funds to close. I have another video that would be probably of great importance to you. And it actually is, how much money do I need to buy a home? And I would strongly suggest that. We're going to go over, though, when I talk with you, how much funds you have. Is it your money? Or is it a gift from a parent or a relative? So those are the areas we're going to cover on your funds. The house. So what is used, or how do we determine the value of the home? Well, you're going to get a house under contract, but we're also going to have an appraisal done. So that appraisal is what is going to be used. It's either that or the purchase price on the contract, whichever is lower, is what is going to be used for the loan or the value of the home during the loan process. So some programs we are getting appraisal waivers on, not many, but it is possible. So if you hear from me, I run your loan through the system. I call you up and say, guess what? Great news. We have an appraisal waiver. It means you don't have to get an appraisal. Good news is that's about $470 you save. Bad news might be that house might not appraise for as much as you're paying for it. So that is the downfall on that section. So what next? Here's what I would highly suggest you do. If you're in the market to buy a home, please reach out to me, and I could be the mortgage broker in your situation. I've been doing this over 30 years. I would love to help. You can do the application completely online. I would prefer you call me. It's 630-338-1160. And in this system, we do mostly everything electronic. So that might scare some of the older people, but younger people, especially millennials, you'll love this. You just upload all your information. I'll go through all that information. I'll go over, break down all the information that you give me, come back to you and say, okay, here's what we're looking at in what range that you would qualify for. I'll give you a pre-approval. You'll go out. We'll get that to your realtor, and they'll find your house, and we'll get you into that house. So thank you so much for watching this. I'd love to help you. Thanks again. Don't forget to subscribe below, and God bless.